All right. All right. So I'm going to start off. Many people wonder if they will be able to afford a home of their own. And maybe their credit isn't very good or they have issues in the past with trying to get approved. There is nothing worse than thinking you have been pre approved for a mortgage to find out that you have to jump through hoops right before closing or your loan will not go through. And that's a huge, huge failure that I know I've been in, and it's not comfortable. Absolutely. So, Rosemary Ashley is with me today. She's an experienced mortgage originator of decades. And over the years, she has helped many people with difficult situations to be funded and enter into home ownership. I have personally known Rosemary for 9 years, and I am one of those people with a difficult situation that she has helped to fund. Not only does Rosemary work with people and go the extra mile to help them get the situation into the best light so they can be funded, but she does it with honesty, integrity, and kindness. And I'm so very happy to welcome you here, Rosemary.
Oh, thank
So
you, Mary. Thank you so much for that introduction. It's great to be here.
right. Well, I know you're unique in your industry. And
In more ways than one.
and I know this that we started off, we went house looking, we got a real estate agent. They said you need to be pre-approved. We called the pre-approval, we called whatever lender they suggested for pre-approval. They send us this nice little letter and it's worthless.
Yes.
Absolutely worthless. So I want to talk today about going through the whole process to home ownership, especially for first time buyers or buyers with bruised or damaged credit, or difficult financial, like they may be entrepreneurs. It's different financial things, or those who are wanting to plan ahead, for
That's
homeownership.
always a good idea.
Yeah. And what steps they need to take into now. Because, oftentimes we're told, that you need to understand your finances. That's a hard thing for a lot of people. And that's not always something that just, because there's a lot of emotional triggers when it comes to finances. A lot of times it's like, I don't have enough money. How am I going to get through this? Or I'm renting. I have no extra money to put away to put down for a down payment, or, just so many different things. So they're in a difficult place or a place of uncertainty. And we kind of want to move people into a place of certainty so
Yes.
that they can feel confident when they go looking for houses, when they're talking to that real estate agent, and they're not going to be taken by a real estate agent who sees dollar signs and nothing else.
Right. Right.
Because I don't know how many people have lost their earnest money, but when you lose your earnest money because your real estate agent wasn't working in your best interest, that's a lot of money.
Well, yeah, and most contracts, at least in my neck of the woods, come with the earnest money being returned if mortgage financing cannot be, commitment cannot be made. But
Right.
yeah, there are some ways that you can lose your earnest money deposit, like if you're not cooperating with the lender, for example, or if you just change your mind, obviously.
Right, right. And a lot of times we do change our mind because we realize that that wasn't quite the place that we needed to be. There was more going on with that house.
It would be an inspection contingency. You
Yeah,
know, since you brought it up, when people are buying a house, I highly recommend they get a private inspection. The appraisal that the lenders do are for the lender's purposes, so we can establish whether or not there's value sufficient that we could resell the house if the customer doesn't make their first payment.
yes,
So the lender's appraisal is for the value, is for protecting the lender, but the private inspection is going to, from a good inspector, is going to show you what you're, how the overall condition of the house, what's going to need to be done. Because every house requires maintenance. So, oh my God, I need a water heater. Well, okay, you're gonna need one anyway. You got a useful life of what, 5 to 10 years on that? It'll let you know so you can plan ahead, but it will also, a good inspector will also let you know if you've got some serious foundational issues.
Mhm.
And then you might want to pass on that one unless you do a rehab loan.
Right, right. So there's a lot of things to learn, a lot of things that we need to know. And one of those things, and I didn't know this, but every industry pretty much has its own vocabulary.
Oh, yeah.
But when you're going into buying a house, I don't think most people know the extensive vocabulary, not only with the terms of the mortgage, but you're talking about even the real estate agent, and your PMI, and what's
PMI,
that?
MIP, you know.
or and one of the things that got me was the four C's. What the heck is the four C's? And it's obviously the capacity to repay, capital, whatever cash you have available, and of course the house is the collateral, but the fourth one is that credit score. Such a huge thing in our economy today is that credit score that everyone looks at. Oh, you're not quite up to that 700 mark. Well, or you're inching too low to that 600 mark, and we can't give you a loan, or we can't do anything for you. There's all of these that goes on, and knowing those terms, can be daunting. I mean, I never, my first house, we didn't know what earnest money was, Of course, we went backwards. We put the cart before the horse. We contacted the real estate agent. We were looking for houses. And they never said, okay, well, let's get you involved with, somebody who can help you with a mortgage. They just went ahead and started showing us houses. And then we're like, okay, we really like this one. And they're like, okay, how much earnest money do you want to put down?
You're like, huh?
Like, I didn't know we needed to
All of
put
my
earnest
money
money
is
down.
earnest. I don't know.
So there were so many things that we didn't know, like housing, you know, expense ratios, debt to income ratios, you know, there was just so many things. So where do we start? That's a big question. Where do we start when we are um, looking for the opportunity of being a homeowner, and we are first time buyers, or maybe we haven't bought in a long time because we've got some blemishes on our credit? We just kind of were like hoping sometime in the future we're going to be able to have the ability to buy a house. Where do we start?
Well, I think the place to start would be with a lender, a mortgage banker, and preferably one that you've had some contact with it or that has been personally referred.
Okay,
And
so let me stop you right there.
Mhm.
Sorry. Are you that person?
Of course.
Okay. Okay. So
Most of
for
my business historically has come from real estate agents. I got into this business, it was strictly a professional sales. And I would make relationships with the real estate agents because what they needed was a lender that would be, knowledgeable and work well with their customers and in good communication. And, back when I got started, we had books. The underwriter rules came in books, and we didn't have online. Loan officers didn't get to go online. So, we would basically have to learn the rules and then, keep updated with all the changes. And they sent those out quarterly, and we'd read through them for the bold print. But, nobody, including the actual underwriters, the people who make the decision, nobody knows all the rules. I was talking to an underwriter, I'm like, man, just about every time I look this up in the underwriting guidelines, and the underwriter said to me, well, thank you, Bernie. Underwriter said to me, I do the same thing. I do the same thing. Um, because the rules change all the time. And it's impossible to know. And there's so many different products. There's so many different things that you need to look at to see if the customer is going to fit in a specific product. And so there's so many different situations that you have to find the ones relative to the customer. And that takes time.
So it would be safe to say, now you said you were referred by real estate agents. In my experience, other than one, yeah, the real estate agent did not refer me to someone that was helpful.
I got into the business. I started originating loans in 1991. Shortly thereafter, there was a rule. We called it a no kickback loan rule from RESPA, anti-kickback, which means I can't give the real estate agent money in return for a referral. Basically, the whole philosophy on the Real Estate Settlements Procedures Act, and this is my opinion, no lawyer, but my opinion is that the intent was that when customers put their trust in a real estate agent for a referral, those referrals are based on what's best for the customer. What is, it's the responsibility of the realtor, the buyer's agent, to make this the most seamless process as possible. And you can't do that without a whole team of professionals: mortgage banker, title agent, inspector, insurance agent. There's all kinds of industries that surround it that the customers need. And if you're going to give referrals as a trusted real estate agent, if you're going to give referrals to your customers, Real Estate Settlements Procedures Act, the intent of it is that you do it based on what's in the best interest of the customer. So the anti-kickback law is so that you're not influenced. Somebody's going to pay me X amount of dollars. I'm going to think that person's better, right? Yeah, this person pays me. Even if you don't do it on purpose. So what has happened over the decades, there's been companies, mortgage companies that have merged with brokers. So the real estate brokers will own a piece of that real estate company or the mortgage company. And then those real estate agents in that brokerage are highly encouraged to patronize the preferred lender. Okay, well, the broker makes more money because the broker owns a piece of the mortgage business. There's also other ways. There's marketing service agreements. There's joint advertising. And that's all legal. I can split a postcard with a real estate agent and we can send it to a particular neighborhood, and I've done that, split the cost. But here's the thing: who's more likely to get, who they get listings? That's what they do it for. They do it for listings. I don't benefit by listings, but still there's a lot of mortgage reps. They will, co-op and buy the leads, cooperatively buy the leads from people. And that does, all kinds of cooperation. And I'm not saying that's necessarily a bad thing, but in all the different ways that real estate brokers and mortgage brokers or bankers are cooperating with financial incentives, it's less likely that somebody who needs a referral is going to be referred to somebody that doesn't have a financial interest. Now, it doesn't mean it's impossible. I still get referrals from realtors and customers, but and there's no financial incentive to do it. The financial incentive is the certainty and the closing the deal and a repeat business from the happy customers. That's really the incentive. And then the happy customers refer somebody else, and then that it's a circle of referrals. But the Real Estate Settlements Procedures, anti-kickback, this is just my opinion. It may not represent the opinion of anybody else, but it's just for humans. Humans aren't allowed to do it. But if you're a business entity, you can do it. And you do it through a lot of legal loopholes. But the bottom line is still, if you're getting a referral, if you're giving a referral, is that person going to be the best person to take care of that customer? And they could be. Just because there's a financial incentive doesn't mean they're not a good loan officer. It just means when you're the customer's perspective, you want to, do your diligence, talk to that person, see how you feel. But I'll tell you what, another big thing is, used to be when a kid was getting a house for the first time, hey mom, where do I get a mortgage? Where should I apply? Oh, you go to wherever bank or credit union, I got mine, right? So you look for referrals for older people that have already been through it. And now, what do kids do? What does anybody do? How do I get pre-approved for a mortgage? And now the internet's got a whole lot of information on it, but it's all designed to increase sales somehow, some way. I mean, it's all sales. Nobody's giving you free information without a reason. Give you free information because I want your business.
Right.
So when people go online, there's no way that they can tell what person is better just by how much money they have to advertise. And the big mortgage banking companies, that they have huge advertising budgets. And so they're in front, and good technology. And so the person on the online thinks, oh, well, this person keeps showing up. Well, that person paid a lot of money to show up. So where do you think they're getting the money? They're getting the money from their customers. You really think they're going to be the best price? And, not necessarily. I mean, people have deals and everything like that, but it's not like, shopping for, a pair of reading glasses. I mean, yeah, there's a quality issue. Some will break faster, some will break, some will break before I lose them, and some will break after. But it's not like that, because it's not a product. It's a service of helping you get through the process, the customers get through the process. So you need a combination of somebody that you can basically be married to for a couple of months without like living in the same house.
Right.
And
because
cooperating.
you're going to be very intimate with that person, especially when it comes to your finances. A lot of people have difficulty sharing the truth about their finances. And you're going to be, like you said, kind of married to that person, because they're going to know every single thing about you. I love the
No.
caveat.
We do find out a lot.
Yeah,
There's a lot we don't know, Mary.
That's true in a lot of relationships too. But there's a big caveat with the internet, and that is, like, I was doing some need for insurance changes. And you can get all these insurance calculators and get these pre-estimates and everything. Now, I got a wonderful pre-estimate of $300 for insurance. And I'm talking to my insurance agent, and I, asked them, and they gave me this wonderful pre-estimate too. But then when they ran everything and they picked up everybody who lived in the house, which we have multiple people have their own insurance, but everybody that lived in the house was all of a sudden had to be excluded from that, or if there was a claim that they had made, that actually went against my insurance. So my pre-estimate of $300 now, yeah, you laugh, now became a quote of $560. That's a $260 difference. Now, I know when we were looking at our last house, we were trying to find a lender. We'd already talked with someone and got that, but I went online to see, okay, what's going with the interest rates, what's, kind of doing my due diligence. And, there's all these companies with these great mortgage rate calculators.
Hmm.
And not one of them was accurate.
Right. Well, it won't be. And quite honestly, interest rates change every day, and then sometimes several times throughout the day. and that depends on the lender. It also depends on the mortgage amount and the credit score and the down payment. And there are a lot of things. So when people look at the internet for interest rates, that's the best scenario that they can put together. Of course, because they don't know that they're paying 2 points or whatever, 2 points. And that means, on a $200,000, that's $4,000 extra in closing costs. And the customers, you mentioned insurance, and that's a real good example. Insurance, financial planning. I am not a financial planner. I am not an insurance agent. I don't like that stuff. Okay, I don't like that stuff.
Most of
So,
us don't.
well, yeah. So when I was getting insurance a few years ago, I loved my insurance agent. And he's no longer in the business. But what I come to find out, I don't even think he knew. The insurance that I have, it comes with a roadside assistance, right?
Mhm.
What I did not know is that every time I called roadside assistance, they included it as a comprehensive claim.
Oh, yeah.
I didn't know that until I went to go get a quote from another real estate agent who is in business, and I refer customers to him.
I mean, an insurance agent,
What did I say?
real estate.
Yes, I mean, yes, yes, yes. Yes, yes, yes. Check me like that. But yeah, and then he told me, he said, I saw all these comprehensive claims. I was wondering what you guys were doing, and I looked it up, and that was just getting a jump for your car. I said, that's a comprehensive claim. Are you kidding me? And he said, no. So these things stay on for 5 years. My credit score is tapped. Not credit score, insurance score is tapped
Mhm.
for 5 years from each incident, because I didn't know that a roadside assistant was the same as a comprehensive. And that was particular to the company that I'm working with. And the actual, so you know what I did? I mean, if they got the best price, I'm still going to keep them, but I got AAA roadside assistance. They don't add to my comprehensive. So those are little intricacies that in any of these professional services, including mortgages, you're not going to know. Okay.
Absolutely.
I don't think my insurance agent knew, because I specifically asked him. I said, do I still need my AAA?
Mm-hmm.
I think I did. So I think he didn't know, because he's really good.
Well, that is so true. I think a lot of things when you look at your policy, it is a contract. And this is where we don't always, know what the contract says. It's written by an attorney.
Lots of attorneys.
Yeah, exactly. Well, he's got a team. And so it's written in a way that benefits the insurer or the mortgage, or the real
Absolutely.
estate agent. It's not written in a way that benefits the consumer. And if
Right.
you are not savvy about it, you don't know. And I did have an attorney that said to me about the last time that I bought a house um, there in Michigan, and that was, you just signed away your entire life on
Really.
this contract. And it was a big real estate company. And essentially, there were 5 clauses in there that they could come back at me if I, didn't give them everything in a honest fashion, including, for their time that they spent with me.
Well, let's be clear. The capitalistic model that is probably the best model that I know of, where people who don't have resources can effectively become a person of means. But that's not that's not a steady path. And a lot of people have in our minds that bigger is better, right? The bigger the company, they're growing, but and you and I've been around several decades now. we've seen it.
Mhm.
I saw I saw what happened when big companies like AT&T got broken down for competitive purposes. But the quality of and the phone services, I don't know. I think they're pretty expensive now. And I don't think the quality is as good. So we tend to look at, oh, well, it's a big bank. Let's go to the big bank. But and it used to be people companies got big because of their success that was based on working with their customers. But a lot of things have changed in not in every industry, where we've got the immediate information online. That's all an advertisement, pretty much. I mean, it is information, but it's information to let so make it more, including the stuff you find out about me online. I want people to come to me. I mean, it's not a bad thing to want business and to advertise on the internet, but it's just that people need to realize that there's a lot of things you don't know that you don't know.
Yes.
So, I mean, you don't know, so you don't ask. And if you don't ask, you're not going to find out
Mhm.
unless it comes up. So that's when, you buy a widget online because it's exactly same strength, it's going to do the same thing and you can compare it easy. But when you're starting to get into complicated products, insurance, financial services, mortgage bank, I mean, a lot of things, you don't know what you don't know, and you cannot get enough knowledge to make a sound decision, in my opinion. Okay.
Mhm.
Customers want to tell me everything that you know about this mortgage or all the different mortgages available. Well, if I did that, it would take years and I would get paid for teaching. Okay. And I don't get paid for teaching, I get paid for closing loans. So there's nothing, aside from getting the experience yourself, there is no possible way that the customer is going to know about as much about mortgage business, mortgage products, more as me. Why? Because this is all I do all day long, for years, decades. So that's when the importance is going with somebody you trust, because that person knows a whole lot about the product or service they're selling than you do. And they can say, well, no, Mary, I'd really rather not do that loan for you because of this. Or, or I'd rather we not do it that way because of your goals. And that's when it takes the human. And unfortunately, in my opinion, over the past couple decades, it's become more and more, mortgage originating has become more and more a sales job and less professional service. And mortgage companies get paid by how many dollars they originate. And so that's how mortgage bankers, loan officers get paid. Makes total sense. They get more money, the higher the mortgage amount. However, you know how the ignorance is bliss?
It's not. But we
When,
don't know what we don't know.
but when you've got a lender that doesn't know anything, just got his license taking phone calls,
Mm.
they don't know anything that might affect you in the long run, or even in the short one while you're getting it. And
Right.
so this is more about getting people on paper and doing their loan. It's more of a salesy job than it is a professional service. And like that's kind of disappointing to me. So
It is.
I'm redoing my business so I can go to the consumers directly.
I think that's great. We are running out of time on this video, but I do want to uh look at what we will cover in the next video, and that is 5 questions about buying a house on less than perfect credit. So I will see you on the next video.
Very good. Thank you, Mary.